Let's get up to speed now on housing. Mortgage rates continue to decline, dropping today for the third straight week. The average 30-year fix now sits at 6.15%. That is down pretty considerably, 6.33 according to Freddie Mac, down dramatically from last year's peak of north of 7%, but still up considerably from the 3.56 we saw 1 year ago. Said Freddie Mac's chief economist, quote, rates are at their lowest level since September of last year, boosting both homebuyer demand and home builder sentiment. And that was some of the big stories coming out this week, Seana, that we saw a bit of a boost in mortgage demand. We saw a bit of a boost in home builder sentiment, generally speaking, still pretty depressed. But I think it really bolsters the point of view that we're going to be okay here, that the housing market is not going to crash. And it looks like that mortgage rate is going to continue to steadily decline despite a few more Fed hikes ahead.
Yeah, hopefully it does. As we do see improvement in inflation, we're starting to see improvement on the mortgage rate front. It's going to be interesting, though, to see how far of a drop we could see in mortgage rates. I think most of the experts that we're talking to saying that it's likely going to be in that 5 to 6% range. But the question now is whether or not it's low enough to really spark and trigger more activity in the market. My first thought is that still a bit too high. We're going to have to wait for it to fall maybe a couple more weeks, see a little bit more improvement, maybe just below 6%. That will be enough to do the trick. But this is certainly the trend that the housing market wanted to see. We know it has been amongst the hardest hit over the last several months. Certainly I've seen that reflected in the numbers. So now some improvement here. Maybe that will start to help some of the activity out there in the housing market.